Teddy Keckstead from Forex Trading Unlocked, and I just want to welcome you to our webinar today. Real quick, I just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And if you haven't done so already, please sign up for Forex Trading Unlocked on either YouTube or Twitch, or even both. That would be great. And also make sure you like, share, and spread it around your trading community if you wouldn't mind. And also, when you get a chance, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We'll be going over some high probable Japanese candlestick pattern analysis actually right now. Okay, so we have the forex-trading-unlocked.com website pulled up for you, and we're going to just toggle down past the numbers because we went over all that stuff in our beginning of the week analysis. And as you can see, the Euro US dollar right now is trading just slightly lower on the day. It did make a little spike high following through from yesterday's rally for a little bit, but not very much. So now the question is what is lingering on and going on with the euro? Well, unlike a couple of the other currency crosses versus the dollar, the euro is not trending as strongly. Okay, so now there's a lot of reasons for that. There's a lot of tug-of-war stuff going on when it comes to the forex markets right now. We have a little bit of an indifference going on because we have the oil trade that is on the table for sure. We also have the interest rate trade, which is also on the table, which is making things get a little stirred up in the forex market arena. So now if you guys want to leave any comments, by the way, or questions about any markets as we're going through this, don't feel shy. Make sure you go ahead and do so, okay? And so now anyhow, Euro US dollar, what are we going to do with this? Well, I'll tell you what we're going to do with it. We're going to take a look at this little area here. So we had our bearish engulfing line sell signal. We penetrated the 50% line on the Fibonacci, the 0.618, as you can see right here, level we did not reach. So we did hit our target zone. Is the break over? Well, that's a really good question. So let's take a look at the dollar index. Remember that the euro is the largest component of the dollar index. As you can see, as of yesterday, the market did run out of gas. However, it had a nice rally going on from Friday into Wednesday's trading. So we did have a bullish engulfing line buy signal here. From this high to this low, we'd come just through the 0.618 area. So let's just say that this is only a corrective rally and not a resumption of the overall bull trend that the dollar has been in for quite some time overall. So if we look at this here, we have the 50% mark here, and then we have the 0.618 area there. So let me take off this Fibonacci there. Alright, so we have basically into this little area here. This is about, if we're just going to correct and then the dollar weakness prevails, and if you see this downward sloping resistance line somewhere around today or into Friday's trading, we should basically put a halt on the rally in the dollar index should we still get a further pop higher. So now if we look at the euro US dollar, you can see that obviously with this pulling back, that's showing a little bit of dollar strength today. Not much. You can see yesterday where we had this only little bit of a range trade in the euro. Ironically, when you look at this, we had a lot of trading here on the 18th on Tuesday, and then Wednesday just kind of digested the move here. We're holding support. I think we're going to still kind of bobble around. If you notice, we had a bulk of trading here over the past month was right in this range between $1 basically 13 even, $1.13 half. So that's not very much of a range there. So for your opportunities right now, as far as being a bear, our sell signal has already hit into the target area. There's nothing left here. We're waiting for a buy signal. Does that mean one's going to occur? Not necessarily. We do have overall a short-term uptrend going on in the euro US dollar. We just came off a higher move high, and currently we're making a higher move low. So in order for us to really confirm weakness on the euro US dollar, we need to take out this swing low right here, right around 112.75. Also, this comes in on this upward sloping resistance line or support line right here. So we have key support right here that should we penetrate this, I would say that you're going to see the euro US dollar grind through support. I wouldn't expect any exacerbated sell-offs. Okay, British pound US dollar is a little bit stronger versus the dollar. Of course, the British pound US dollar has a little bit different of a thing going on. So remember that the UK is no longer part of the EU. They've separated themselves, so they have their sovereignty back. We know that as of yesterday, they eliminated the mask mandates, which goes into effect today. All kids are to be back in school, no masks. All people are to get back to work, not working from home, but back to work. Masks are optional now. No more threats, no more fines, no more intimidation. The UK, just like Japan, is dropping COVID mandates and things like that. So what do we have going on here with the British pound? Well, we had a bearish engulfing line sell signal that occurred last week. Okay, this is our target zone down here. We do have this problem though. Between yesterday and today, you had the announcement of the mask mandates being lifted, and now they are lifted. Is this going to continue to accelerate momentum to the upside, or is this just a blip, a little calming blip, because the economy is going to get a jump start in the UK? That's a very good question. So we know that there's a tug of war between the interest rate trade and the oil trade. As oil gets higher, which it was a little bit higher earlier, I don't know where it's at right now, but interest rates have been pressing the lows, meaning higher rates, and that gives strength to the dollar versus the pound in the short run. It kind of gets negated though with oil pressing new move highs and looking to get above 90 bucks a barrel. So in fact, let's take a look at the XTIUSD. So if you look at oil today, it made a higher move high. It's on an accelerated slope to the upside. Now today is Thursday. We're in front of a weekend. I would say that most likely, especially with colder temperatures going on and everything else and all the mandates that are being completely pressed in the United States, opposite of what's going on in the UK, that is this, as long as this trend continues right here, that the GBP USD is also going to continue higher. So our bearish engulfing line sell signal has not hit its mark. If you had entered the trade, you're in it right now. Am I saying to get out of it? Well, not necessarily. By definition, you hold on to the trade. The risk is already here. You know where that is here. Above 137.49, you just do not want to be short. So for any of you aggressive bears right now, or anyone that happens to be short right now, I would be very mindful of this level. One, because if you take out this level, you make a higher move high after a higher move low, obviously confirming strength and an uptrend. It also negates this signal right here, meaning that no longer is this support area even remotely a target anymore. So this is a rough trade here. So I would be very cautious if you're a buyer today, or if you're into buying this market. Make sure that you're also mindful of the fact that this is still coming off of a short-term high and looking to follow through yet for the sell signal. So I would say that 135.74, if you're going to be an aggressive bull, this is your risk level here. The risk level from 2 trading days ago. Anything below here will have us most likely leaning on support. And remember, the pound, it has exacerbated sell-offs and rallies. It really moves when it wants to. So considering if they wanted to flush out all of the week longs, this would be a great area to pound this currency down to, no pun intended, and then see a big bounce here and watch the market lift off and make new highs. Overall, with the UK coming out of COVID restraints and also following the lead of Japan and Mexico and a couple other countries, the US is doubling down, at least as far as the state of Illinois is, and the way our president is looking, and with the new mask mandates and everything else, and they're full throttle trying to impose more vaccine mandates as well. This is not happening around the rest of the world. You know, they're giving up, they're moving on. So the question is are we going to continue to strangle our economy through the measures of protecting people from COVID-19, or at least under the guise of that? So we all know that inflation's running high. if the dollar does remain strong, it is unlikely that it will remain strong against the pound US dollar. So just be mindful of that, until the US changes its tune, and since the UK is a sovereign, they're no longer part of the EU, you're probably going to see the euro US dollar strength versus the euro, dollar weakness versus the pound. All right, let's look at the US dollar CHF. This one here has had a nice little bounce. It had a piercing line buy signal last Friday. Yesterday it came off a little bit. Today it's a little bit more positive. You can see that the dollar is having just a little bit of strength today, not very much, not confirming any true momentum or anything. And by the way, for those of you that are viewing, I'm going to put out a little webinar link here for a Zoom meeting. This is for next week. We have a webinar going on with eoption.com on the mechanics of placing basic options trades. Check us out. We would really like it if you do. So it will be quite an interesting little webinar next Wednesday for an hour. I don't know if you are familiar with eoption.com. They're a fantastic broker, but this is just about education, just to let you know. I'm going to be presenting the webinar, and if you want to check it out, I just put the link out on the chat box on both YouTube and also on Twitch for you guys to check out. All right, so back to the US dollar Swiss here. So this one here, like I said, dollar strength seems like it will prevail against certain currencies, but not versus others, meaning we're going to have divergence, at least that's my expectations, going on in the currency markets. So where the dollar index is going to become less and less of a guide for you versus some currencies. So the euro, I could see the dollar gaining strength on still. Obviously, US dollar Swiss is poised for a continuation to the upside. It is in a bear trend, but overall it's been in a sideways chop. So basically all we're doing is coming off of these lows. We have a short-term buy signal. We do have a target that falls short of higher move highs after a lower move low. So I believe that you're going to see the dollar fall short, hit in this target area, and then probably go sideways for the next month and a half. The only thing that would really accelerate this would be super higher oil prices and a Fed rate hike, which is on the table. So when that does happen, it's already factored into the market, 2 or 3. But once they juice it, and the expectations of whether or not there will be more than 2 upcoming may put some upward pressure for the US dollar Swiss. So be mindful of that. We do have a target. Be also mindful of the fact that if we take out this low area here from the other day around 90.92, then all bets are off. We'll be chopping around support. Not necessarily a big bear, but I'd be cautious being a seller into those areas, let alone even a buyer. I'll wait for another buy signal. So I really believe that this one here is going to be a tough trade moving forward for the next couple of, not just sessions, but the next couple of weeks. All right, let's go to the US dollar JPY. This one has been really churning people up in the US dollar. Yeah, and look at this. We had a hammer reversal buy signal last Friday. We had a bullish engulfing line buy signal on the following day. In fact, I gotta change this little arrow here. Let's get rid of this one, and we'll put another up arrow right here. There we go. All right, so we have the bullish engulfing line there. Okay, we'll just put that right there. All right, so we have this bullish engulfing line buy signal here. Now the low right here of 113.49 is what's holding up this current correction. Should we fall below it, obviously that is bearish because we're coming off a higher move low than a lower move high. But also for all you aggressive shorts there, if we get above 115.07, I would not want to be short here because odds are very likely that we will make a run for 116.36. How high can we go initially? Well, I have 122 as the longer term target. Why 122 is a longer term target for the US dollar yen? Predominantly higher oil trending oil prices, higher trending interest rates for the US. These things compound this trade. Now, the DOGE is unlikely to start getting involved with this rate hike stuff that's going on. First of all, for their exports, it behooves them to be a laggard rather than a leader when it comes to this new change in economic policy by the central banks. Considering that they already came out of their restrictions in December, They are 1 month into being open completely, and we know that just Toyota alone, with considering that they're going to be producing over 800,000 extra cars in Japan for export this month. So they'll be going online and being shipped out by February if they're not already starting to roll out of the harbors and stuff like that. So this is a big deal. So that may restrict how high the US dollar yen will get initially as it pounds through breaches resistance. Like, I would expect that you're going to see lots of quick sell-offs like this one here, just like we just had here, then have a grind higher, pierce resistance, make a nice move. Like here, we made a high here of 115.5, and then we got another 80 pips higher. So this could probably take us up to around 117 even. You'd probably see resistance again come in, see another corrective move lower, but overall I believe we're gonna continue to make consecutive higher move high, higher move low, higher move high, higher move low, heading towards a higher move high. We know that that is indicative of what? Only an uptrend. That is a bull. So be careful of when you're looking to sell. Remember to trade the action, not the reaction. Right now, looking to buy dips is definitely a better strategy than looking to sell into rallies right now. Not that selling is not a bad idea. I mean, we had back here when we made this high, we had a 3 inside down sell signal here. That worked out really, really well. Now we have a hammer reversal, not that strong of a signal, but the bullish engulfing line follow through behind it. That is. So right now I would say you probably are sitting in a good situation for a low risk buy situation. That's another thing. If you are looking to get long and you're risking only 113.49, this is all your risk for a run up that has a potential to get back not just above 115, but should it get above 115, it's very likely it's going to challenge this high of 116.36. So you're looking for almost a $3 rally over the next week and a half that may occur in the US dollar yen as far as strength coming into play. I don't think you're going to see a lot of weakness. The only thing that would give us a lot of weakness would be if we had a big sell-off in oil and also a big rally in the 30-year Treasury bonds and the 10-year notes, which I think is highly unlikely. So now what do we have going on in the Australian dollar, US dollar? Well, we have a bearish engulfing line sell signal. We know that overall, this little target area here with 71.56 down to 71.18 is pretty much our target area. Should we take out this low and we actually come down this 0.618, well, that's kind of a big deal because originally, see this upward sloping support line? That's holding the short-term trend intact. Then we also have, this is a potential shoulder here, a potential head. If this rally runs out of gas, then the key thing is to watch this upward sloping line. So I would key off of the low set just a few sessions ago here at 71.70. If we fall through here, then we've taken out the neckline for a head and shoulders. That would confirm a shoulder, a head, a shoulder. So, and that's the question. So to make this a little clearer for you, let me put this here. There's a shoulder. And then we'll put right here, we got your head. And then right here, we have a shoulder question mark. It has not formed yet, but it looks like it may be forming. We don't want to get ahead of ourselves, but we do have an active sell signal. So as long as we stay below the high from a week ago, that holds this bearish engulfing line sell signal intact. It also means that this head stays intact, and should we run out of gas, boom, and start to trickle, it'll be like a domino effect once we start to go lower here. So is this going to happen? Well, oil is helping to hold up the Australian dollar. However, just like the United States, they're holding on to the COVID restrictions, and they want to make them enforce even more and more mandates and make things harder on their economies. So with that being said, I think it's going to be really tough for the Australian dollar, since it's been in a sideways to much lower trade for most of the last year. It's going to be hard for them to really regain momentum to the upside, and especially now with the way it's been chopping here and forming this potential head and shoulders pattern. I would watch out, especially if tomorrow it reverses gears and starts to sell off in a big way, let alone closes, let's say below the neckline tomorrow. then I would expect to see Australian dollar, US dollar continue lower. All right, let's look at a couple more Forex markets, and then we will get to the cryptocurrency spaces. So by the way, I want to say thank you to those of you guys that are out there and put the likes on for us on YouTube. We really appreciate it. Don't have any questions right now, but that's all right. And we got a little bit of shares. Yeah, thank you for sharing, guys. We totally appreciate your help with that. All right, so New Zealand dollar, US dollar has the bearish engulfing line sell signal just like the Australian dollar does. This one's not quite forming a head and shoulders. This one doesn't seem to have quite the action that we just noticed from the last market. Now, they do tend to travel similarly, but not completely. I think that where Australia has a bigger chance of being a bear, New Zealand dollar, I would use caution. I think you're going to be stuck in a big sideways here like it's been doing for the last month and a half. We had this sell signal here. If you are still in it right now, I would look for a pressure of support, especially if we can get a sell-off in the Australian dollar, US dollar. So there's no head and shoulders forming here, but we do have the potential to trend lower. So right now we have the sell signal intact only if we get above 98.93 here, or 68.93, excuse me, and make a higher move high here that would negate the sell signal. Would we be one? Obviously it would be bullish because it would be a higher move high after a higher move low. And this thing, remember, isn't a short-term uptrend. Even though it's sideways, it's making higher move high, higher move low, higher move high. It's made a higher move low. So the question is, will it go take out this low from 2 sessions ago and then continue to badger support? Should it do that, that would be a good indication that it's going to ride support and hit the lower levels. But once again, not as extreme most likely as the Australian dollar, US dollar. All right, US dollar Canada had a head and shoulders pattern that was really, really, really good to us. And now today, once again, we are leaning on support. So we had a hammer reversal sign the other day that had occurred. But remember, hammers are not like the high probable Japanese candlestick patterns like the engulfing lines. These hammers are more of a not necessarily reversal of trend, but a short-term pause in trend, which is exactly what we had. It's established a good support level. We can see that we bounced, we made a lower move high, and then we made a lower move low yesterday. We already took out the hammer, okay? But we're trending, we're staying right here pretty much as a pivot level. You can see that it came back basically unchanged today. See, now there's US dollar is very mixed. We have weakness in the Canada, we have strength in the Swiss, we have weakness in the yen, we have strength in the euro, we have weakness in the pound. So once again, divergence, you can see, is all across the board here. But we have this trade right now with the head and shoulders. This is one that's definitely on the table, still looking to grind support a little bit. This is a tug of war trade, but the biggest thing I have to say about the US Canadian dollar trade is the fact that, and I don't get this one because they seem to be on the same page, how the Canadian administration and the US administration are not exactly on the same page, which thank God we're not as extreme as they are. However, it's a nightmare as far as the fundamentals. Technicals is all we can go on right now, and it's kind of neutral because we have the interest rate parity issue where, excuse me, where U.S. dollar strength comes in, but we have oil, which is a net. It's a little bit stronger for Canada because they're not turning off their supply lines and stuff like that, let alone their drilling. So they are a commodity country. Remember that. They rely on the sale of oil. So right now, if you are a bull, I would not try and catch a falling knife. We don't have a valid buy signal. Even the hammer reversal buy signal was only a short-term pause in trend, not necessarily a buy signal. So, and the fact that we made a lower move low yesterday negates the hammer, but does look like it is correct in the sense that it's setting up for sideways. So use caution. If you're a bear, I would make sure you have your risk set at around 125.73. If we get above that, that probably puts us in neutral. Overall, this market was a long-term bear. This was viewed as an upside correction that was completed by a head and shoulders pattern. If this was only an upside correction, the overall trend for the US dollar Canada is a bear. Once again, laying credence to the theory that we are in a period of divergence where we will see dollar strength in some currencies and we will see dollar weakness in others. I think US dollar Canadian cross is very likely to exhibit such weakness. Okay? Now let's take a look at BTCUSD. Want to look at the cryptos for you guys. So we had a long-legged doji buy signal followed by a bullish engulfing line buy signal a week and a half ago, and as you can see, we've been going sideways, but we came off a higher, we made this lower move low, made a lower move high. Now we've made a higher move low, and it looks like we're coming right into this upward downward sloping resistance line. If we can get above this, it looks like we'll challenge 44,569. Am I expecting a big pop? No, but I do think we could get to the 45.8 to 47.3 area and then find a little bit of resistance here and start to go sideways. Remember, you had a lot of support here, it failed. Now let's see if support usually becomes resistance, resistance becomes support. So if this becomes resistance, odds are we'll be going sideways for a little bit. However, by attrition, we're already going to come out of this little downtrend. Maybe we are looking to build a base. We don't have any real true reason to be aggressively bullish Bitcoin, but we do have every reason to be bullish. Now, here we have the same thing here. We had a short-term pause for the trend signal here a week and a half ago, followed by a bullish engulfing line here. Took us up to here to make a lower move high. We made a higher move low yesterday, and now we're looking to rally. So the Ethereum has a nice little downward sloping resistance line, just like the Bitcoin does. Should we take this line out, let alone this last swing high, then this one I think you have the highest potential. Like right now, buying Ethereum, looking for a rally up to 3,856, up to 4,080. I believe this is a very, very rational target to the upside that you can look to spot. I think you have more bang for your buck also as far as a move where, let's say that we're correct as far as how Bitcoin goes and even Ethereum goes. Well, for your money, you will get more of a rally out of the ETHUSD than you will out of the BTCUSD. You're going to see a higher percentage retracement to the upside, and also because of the cost, you can buy more Ethereum than you can Bitcoin. So not only do you get more bang for your buck, you have the ability to leg around a little bit, so take a little more profit off on Ethereum. So if you want to just look at it as a trade and then some as an investment, I would say Ethereum gives you the biggest potential, if you will, for your money. Not that this is what you should do, but I'm just giving you the numbers. From a number's sake, it looks like it is definitely the right thing to do in this situation. XMRUSD Monero, this one's going sideways, not looking for a lot here. It's coming off of a higher move low, actually, but it made a lower move high. So this little buy signal here, we had a bullish engulfing line. We came into the short-term target right here. This is already, as you can see, if we take this high down to this low right here, the 50%, 618, we already hit the target. Okay, so this one is already done as far as the buy signal is concerned. Does that mean that the trend is going to be bearish? Absolutely not. However, we made a higher move low here. Now we've rallied to here. We need to take this high out because right now this is a lower move high. See, we came off this lower move high here. Then we made it. See, let's look at the trend. Trend's coming down. We made this lower move low, lower move high. Higher move lows puts us on pause. Lower move high keeps us on pause. So now the question is, now we did have a bearish engulfing line sell signal here. Let's take a look at this one. And this could be a big sideways trade here, which it is. So we already came, if you look at from this low to this high, from a Fibonacci perspective, we've already come down in the 50%, 0.618. So this is all getting ready to churn and churn and churn. I would be very cautious. I would look to buy dips or sell into rallies. So we had a sell signal here. This is already gone and done. Right now, is it a bad place to buy it? Absolutely not. From 180 to 220, I think it's a fantastic buy. Looking to get out around anywhere from 300 to 350. I think those are your buy and sell areas because I think ultimately that's the containment for Monero moving forward. Even if Bitcoin goes to like 200 grand, $500,000, I don't see Monero really successfully breaking out to any really high extreme. And if it does, I don't see it holding it. So let's say Monero shoots up to $700 $100, it's got a really good chance of flying right back down to 200 to 180, somewhere in this area here. So be mindful of that. That has a lot to do with the technology and why it would be restricted. All right, so now we have the DOGE, this one here. People are still clinging to this one. I don't know why, but this one here is a big sideways. You notice how we had the buy signal in Ethereum. We're trending higher in Bitcoin, so this is just slightly up on the day, but overall this is a dog with fleas. I would stay away from this one. This one really does not have any long-term sustainability as far as technology. The only thing this has is got a lot of suckers that are caught long with this one. So there's a lot of people that own it at 30 cents, let alone 50 cents. And is it ever going back up there? Well, that's a good one. I think that's going to take one hell of a marketing ploy spin-off, and if you do see such a spike, it will be a spike. I don't believe that it has any sustainability to hold any potential run-up. All right, let's take a look at the Euro US dollar once more. As you can see, it's hanging on its lows right here, but pretty much a quiet trade for the day. So I want to thank you for your feedback today with your likes and your sharing. We definitely appreciate that, without a doubt. So we don't have any questions here. So with that being said, I guess we looked at all the markets. So all I can say right now is, if you don't mind, if you haven't already done so, please subscribe to Forex Trading Unlocked on Twitch and YouTube, and like, share, with your friends. Tell them to follow as well, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And if you haven't checked out the link that I posted in the chat room for the e-option webinar coming up next Wednesday at 1 p.m. Central Standard Time, that would be January 26th, sponsored by e-option as well as Forex Trading Unlocked, I will be giving a webinar on the mechanics of basic option trading and entering them on a platform and stuff like that. It'll be a great little webinar. So once again, I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. We appreciate your time today. Good luck in all your trading, and